Welcome back to the Successful Farming Podcast. In today's episode, hosts Nick Repke and Bob Linneman discuss the recent USDA reports in September, focusing on corn and soybean yields, market reactions, and the implications for grain exports.
Tune in every week for a new episode of AgriPulse Newsmakers. We'll bring you the latest in food and rural policy, including exclusive interviews with members of Congress, agency chiefs, and business leaders. You'll find insights and analysis you need to understand the coast-to-coast politics facing everything from the fence row to your dinner plate. Just click on agra-pulse.com and look for our weekly updates. Agriculture and food leaders trust the balanced reporting and trusted insights of AgriPulse, and you can too.
Good afternoon. My name is Nick Repke. I am with Cleiss Commodities and joined by Bob Linneman, also of Cleiss Commodities. We're here on this September afternoon to bring you the September Successful Farming Podcast. Good afternoon, Bob. How are you doing?
Not too bad, sir. How are you doing, Nick?
Good. We had a very interesting week, and it's been a few weeks since our last update, so I thought maybe we could talk about the USDA report that came out last week. Plenty of new news in there. We spent a lot of time last month talking about the record yields, and maybe you want to run us through what you thought of last week's report.
Yeah, I think it's a good thing to start off with what traders were looking for. We were looking for a cut in yield, and subsequent cut in production for both corn and soybeans, and we got what we were looking for in corn. Nick, I really think that was a good number by the USDA. I think there were a lot of folks that were leaning towards a little bit lighter side of that. Maybe a bushel and a half cut or somewhere between that and a 2 bushel an acre decline from their very, very big number at 188.8 in August. So to pull it back 2.5 bushels an acre, I think that was a great adjustment. I think they made too much of an adjustment, too big of an increase in August there. So pulling back like they did was good. Soybeans, I thought we could have been a little bit more, half a bushel an acre type thing. 1.2 is the market didn't care too much about that, I think, to be honest. But I think, Nick, the bigger picture is the thing that we and hardly anyone was really looking for was the acreage change. That one, I think, had a lot of guys scratching their head, wondering, was this a misprint or what happened here? Because, to get an acreage adjustment in the September report, I don't even, Nick, when was that? I don't even know when's that happened last. I mean, it's one of those things.
It's been a long time since we've seen that. That's for sure.
Yeah. And I think, you go back to that and I mean, my knee jerk reaction was, no, this can't be right. This number is another 1.5 million or 1.3 million, whatever the number, final number was, but it pushed harvested acres over 90 million, Nick. And you can correct me if I'm wrong here, but I think that you got to go back to the 1930s before we had, since we've had a number that large on planted acreage or harvested acres for corn. So, I mean, these are some huge numbers. And you look at the other crops out there, total crop, ag land in production, Nick, I just, you start doing some simple math and things aren't adding up. So I'm just wondering at some point here, whether it's next month, maybe it's an interim in between monthly reports, we get some type of an update. But a lot of guys are just sitting here scratching their head going, what's happening?
Yeah, it's pretty funny. A lot of guys I talked to asked if they planted parking lots and road ditches, and we kind of broke down some of those numbers, got a little deeper into that 1.5 million acres, and it really does feel like it's a lot of that same fringe acres. South Dakota was a big one. North Dakota was a big one. Missouri, all those added acres, along with Illinois and Indiana, which was somewhat surprising because typically those acres don't switch a lot. So,
right.
That one, was a 1.5% increase to, like you said, back all the way to the 1930s when we didn't even plant soybeans. So,
right. And I think, one thing with those fringe acres, like you mentioned, that those are acres that are tough to get trend line yields. Those are acres that aren't always planted to corn. Maybe they have a 3-year crop rotation. Maybe it's a soil type that just doesn't do well with corn like other soil types on the farm might. I know in my backyard here, northeast South Dakota, what got planted this spring was fence post to fence post. However, I mean, we had areas that got 30 inches of rain in 6 weeks. So the drowned out spots are larger than normal. So even though planted acreage, might look big, what we actually harvest and those farm averages, a lot of folks are hoping for just normal year when it comes to on-farm yields. So it's going to be, but again, we won't see that until what, January maybe, Nick?
Yeah.
I mean, that January final production reports. We've got some time here before we get to those numbers. Wheat, wheat, unfortunately, it's struggling on the world stage. The world numbers there increased more than expected with better crop suggestions from, let's see here, Russia, from Ukraine, from Europe, from Australia. I mean, almost everybody had increase in production estimates in this report. So again, a bearish side of things there for wheat. That story has been that way for, I don't know, a long time, Nick. We're talking over a year here since we've had really anything super friendly in the wheat numbers as far as these reports go. But I think, yeah, looking at that now going forward, Nick, what are your thoughts here? What do we need to see here on the grains in order to encourage either short covering or new longs to come to this market? What do you think it's going to take?
Yeah, I think we're starting to see some of that. So this is the second month in a row we've had relatively bearish reports, and the market reacted positively. So even though we initially sold off last week on that USDA report, the market closed up 8 to 10 higher, depending on which month you were looking on corn. And it also led to a breakout, which is wonderful. We'll get to the charts here a little bit later. Same for soybeans. It was relatively neutral to slightly bearish, and that market also closed up. Now, we're not following through here this week so far on Monday, but, falling dollar is definitely going to be helping these grain markets. This August definitely looks like a low. Pretty much anybody in the business now, I think, is agreeing with our analysis that August 8th report was the low. And I think we're starting to see some confirmations of that. So ending stocks are pretty sticky now, back at 2.1. And still right at that 300 mark, give or take just a little bit on soybeans. And we've really, the market feels or is telling us that we've seen the bottom. At the same token, I don't want to get too excited. I don't think it's going to be a straight line higher into harvest. It's just, that'd be very unusual.
It would be unusual. And I think we have the fall insurance window, the fall prices get set, harvest prices for insurance get set here in October. And I hate saying this out loud, but do you expect or do you foresee that we do see prices kind of maybe drift sideways to, maybe a little bit lower biased as we head into harvest? I mean, seasonally, that's kind of what we're used to, right?
Yeah, that would be normal. The next month on soybeans, especially seasonally speaking, is not great. And frankly, when it comes to marketing and like revenue for the farm, a lower price on the board going into that insurance level would actually be beneficial as long as we had a late year rally, which we've seen, the last couple of years anyway. We've seen some strength in November, December, and you get a low insurance rate and then you get a little bump, a 10% move in the market, and you're able to sell your grains and create more revenue for the farm. That isn't always a perfect marketing plan, but it's been reality here for the last couple of years.
Yes, it has. It sure has. So if you're forced to get rid of some grain at harvest because you can't store it or whatever the reasons are, I think it would be beneficial to at least look into and, explore those different ideas as far as trying to retain ownership going into the first of the year, going into that January timeframe and seeing if you can't have some long exposure, retain some of that ownership one way or another. But going back to that report, Nick, anything else outside of, what we talked about there, or should we just jump right into kind of the next big thing for grains, which is exports?
Yeah, I think exports are probably the next big thing here as we look forward. We just had some talks over the weekend with China. Obviously, nothing is done. Otherwise, the markets would be ripping higher on this Monday. But we did see a productive meeting. It sounds like they're working on a template for some sort of trade discussion. But exports are going to definitely be the name of the game here in the near term.
Yes. Yep. I agree 100%. I mean, with harvest right around the corner here, you've got some, your natural sellers are going to come to the market as this combine start rolling and harvest gets underway. We need something. We need a headline. We need a bullish headline to kind of offset some of that and counteract some of that negative that always comes with the harvest get going here. Until we get to that 50% mark is what we look for, Nick. Right around there. I mean, that seems to be kind of that line in the sand that once we get to 50% harvested on both corn and soybeans, that's usually when you can kind of say that the dry, the guys that have to haul it to town, they're kind of done hauling to town. Anything that is left, the harvest pressure into the market kind of subsides. So I think but we're a ways away. We're a few weeks away from that number for sure.
Yeah, absolutely. Those extra bushels that, USDA thinks is out there definitely come in, and that big wet blanket is kind of removed. When we're talking a little bit about exports too, we are talking about some of the movement in the dollar. We've been seeing it get a little bit weaker, Bob, and we have a big FOMC report this week. How do you think that's going to affect the grain markets over the next, month or two?
Yeah, so that's an excellent question. The Federal Reserve does meet here on the 17th. The market is expecting pretty much almost a 100% chance of a 25 basis point cut in the short-term interest rates. There is a small, 10 to 15% chance that they might go a half a point. But I think the market's pretty much baked in that quarter point commentary that will follow, Nick, is going to be super important. We've seen the last, 2 months, if you can stretch it, maybe 3 months worth of economic data is saying that they probably should have started cutting rates earlier than right now. And economists, it will tell you that when you adjust monetary policy, it has a lag of 12 to 16, 18 months, a year to year and a half. So we should have, they would have said we should have been cutting rates 3 months ago. And hindsight's always 2020, so we need to consider that, obviously. But again, if we are looking at the dollar again being impacted kind of in a negative fashion because of interest rates being cut, the bear trend in the dollar should sustain. And I don't see anything out there that would change that. The bigger picture now, can it bounce a little bit? Sure can. Yes. I mean, I think that 99 to $100, the par mark, as they call it, on that dollar index is probably the top side. And Nick, I think to the downside, depending from here to the end of the year, I mean, 90 to 92 would be a big downside target for that US dollar.
Yeah, I've followed the dollar pretty closely all my career, and that 90 to 92 has been very sticky. 2018, that was near the bottom. Late 2020 was a bottom in there. 2021, that was the low for the year, right? We're talking about 50 points there. It was 89.51 was that 2021 bottom before it ripped higher all the way to 115, basically crushing exports for the grains and most of the rest of the U.S. exports too, but especially the grains. So
yes,
this movement lower really and the policy of lower rates is definitely going to be helpful. And I understand the concerns as far as inflation, but inflation's basically hit everything else but the grain price. Grain prices could use a little inflation on that end.
Yes, yes, they could. I think a lot of folks would agree with you on that one. Any other outside markets? I know we've seen headlines cross with the Dow Jones, the equity markets in general. I mean, hitting all-time record highs here and there. It seems like maybe every week or every other week we see that headline cross. Do you think that we would see any money flow change? Meaning that, the stock market has been one way ticket, just up and up and up, keeps clipping to new highs. And you just said the grain markets we're at those lows, maybe carving out a low, but we need something in there to really give the market a pop. Do you think there's anything that we could have in between between here and the end of the year, 3 months, just over 3 months, Nick, where we see the money flow come back into the grains? I mean, do you think that the big ticket item here that everyone's waiting for is that trade deal with China?
It really appears so. We do have several contacts in DC. We've heard from some customers that work with some folks out there, and it doesn't sound like anything is going to happen that's extremely beneficial in the near term. Not to be real bearish on the deal, but China's bought a lot of their grain already, and they've forward bought some. So even a handshake deal, say, yes, we're going to buy some grains, everything's roses and sunshine, definitely, I think, would put a floor in the market. It's just not going to get anything too excited. And we've been through this before, Bob. It is a show me market. So until you start seeing some of those flash sales where China's in and buying some of our beans, they definitely have a need. They just don't have any short-term needs. So it's hard to imagine a world, I guess, for me, where we roll over on the equities, people get spooky there, and then move into the grains as a flight to safety. First of all, there's a couple things wrong with that premise, is I don't know what's going to spook this thing. We are very fluffy in the equities. The NASDAQ, the S&P, all are extremely high and going higher. They're higher this week, they're higher last week, they're higher 7 months in a row. So it does need a breather, but that would just be profit taking, and I'm not sure that gets us the grain market. And like I said, the other problem with that is if we start talking about shipping stuff to China, I'm not sure the market's going to care until we actually see it.
Yeah, and I tend to agree with you on this. I mean, maybe we might be in the minority on this discussion with the need that China is going to step in and sign a trade deal, and maybe they do. Like you said, the quantity and those folks that are hoping that it's going to be similar to the phase one, that the current administration was able to get here a few years back. The world balance sheet isn't the same, and if you're in the shoes of Chinese importers, you're looking at the world balance sheet is very comfortable, almost 20% more comfortable than it was when the phase one trade deal was signed. So they don't need to run to the US to buy US soybeans right now. Okay, now that being said, exports currently on the new crop marketing year are at a phenomenal pace if you exclude China. So our business that we're getting done with other countries on exports of new crop soybeans is on a great pace. We're doing phenomenally well with those sales, but we need China because the cumulative number for new crop sales is way, way, way behind our normal pace. So that's kind of the short and sweet story of soybeans and corn. We're doing a phenomenal job. I mean, almost record. I think week by week, we either are at a record pace or we're at a second to record, next to record pace for new crop sales. And that's not including China, where the record that we're kind of bouncing back and forth with the year that we did that, China was a big purchaser of U.S. corn. So again, for right now, the corn market looks great, but again, what was the production number, Nick? 16.8 billion bushels. We need it to be because we got to get rid of a lot of corn. That's we need to move corn. We need to move the corn. So we are doing a good job with that as far as the exporting side of things. But again, I think to get the money flow, to really get prices up and get the farming industry excited again, you have to see that the money flow come in, and they're probably only going to come in with some type of a trade deal with China.
Yep. Couldn't agree more. Well, Bob, let's take a look at the charts. That's something I think is important for everyone to realize kind of where we're at and maybe where we're going. Would you like to run through them?
Yeah, sure can. Yep. I'll pull up the old December corn chart here. The breakout on Friday with the report, which was a kind of a bearish report, closed higher. We got all the way up to the, just shy of, call it 430, but it was the Friday, July 18th high was 430 and a quarter. And then, that Friday, September 12th, we hit 430 and a quarter. So if you want to call it a double top, call it a double top right there. That is the line in the sand, Nick, that we need to get above to really have a chance at, the 450 to 456 window would be your next targets up there. So, you've got a good, 20-cent run, or try to at a 20-cent run if we can get above there to really get to your next technical target. So that D's corn, it needs, like we said, it needs the extra shot of momentum. And where is it going to come from? What is going to be the headline that gives that market what it needs? And I think for now, we're just going to have to see if it can't slowly climb higher, etch a new high every other day, something like that, and just slowly try to keep building momentum and keep an eye on what the funds are doing. Are they short covering? And dig into the report from the CFTC, the Commitment to Traders report. Are shorts covering or new longs getting into the market? Keep an eye on what's going on there because that does make a difference. Jumping over to the soybean chart, I'll just keep rolling here, Nick, if you don't mind.
Yeah, absolutely.
All right. So report day was a solid day volume-wise, as well as kind of popping higher through that trading range we were stuck in for 6 or 7 days. And again, we got to that just shy of 1050 on Friday. You got above it today and then came all the way back down and settled kind of almost where we opened the day. It was just a little bit lower than where we closed on Friday. So again, it still made a higher high and a higher low on the daily chart. So no real damage done there. We just need to keep that same momentum going, Nick. And really, the target for right now is at 1060, give or take a penny or two. And then we've got to get to the 1074 and change number from June 20th. Those are big levels that we're watching right now. Momentum indicators did flip on Friday, on the report day there, and they are favoring the bulls. So let's see if they can't put together a string of higher highs and higher lows and keep going here with some technical momentum, because right now waiting for a trade deal and momentum to develop from that, it's you might be waiting, a few more weeks or a few more months. We just don't know. So we need some technical momentum to kind of step up and try to push this market higher.
Great. Well, thank you for that. I would just like to add that wheat finally had a weekly candle on their chart last week. That is the first time in many, many weeks. So if that wet blanket would also get off the corn market, I think that could help us move forward too.
Yes, yeah, I agree with that because we are exporting. We're doing a great job on exports and wheats. We didn't touch base on that too much, but I think the exports in the wheat market, those numbers for new crop are on a great pace for the USDA target, and we're very competitive in the world because prices are low, dollars low. So again, we are exporting a lot of wheat. We just we need to export more of it.
Yep, couldn't agree more. Well, a few final thoughts. A marketing plan does include making forward sales, which I hope everybody did this last spring. It includes crop insurance, and it also includes the ARC and PLC programs. So right now, kind of as we mentioned a little bit earlier, the most profitable combination would be to take corn and soybean prices lower into those insurance levels and then bring it back sometime late this year, first part of next year. Probably be the most likely scenario, which would allow the farms the most revenue. So we're not really rooting for this stuff to go lower. At the same token, if it does, there is no reason to panic. Your programs and your crop insurance should help you through that. The harvest is a wet blanket. It is very difficult to gain much traction. And we're looking at some price levels now that are at least 10% off the bottom end, which is about all you can really ask for in September and October off of corn and beans anyway. Bob, you have a few final thoughts?
I don't. I just the Federal Reserve announcement here this week, or when our listeners listen to this, just whatever that decision is, look for the rate cut, but then really look into the commentary. That commentary is going to be super important as, from now through the end of the year as to what they really think of, monetary policy. Are we going to see another quarter point, before the end of the year, or are we going to see another 3/4 of a point before the end of the year? I mean, I think there's a wide range of expectations here, Nick, on what that dollar does, or what the Fed will do with the interest rates, which then impacts the dollar, which then will impact grain exports. So it's something that we need to keep an eye on. It also will impact your bottom line because of interest rate expense, for next year. So again, it's one of those things that we want to keep a close eye on it, even though it's not USDA related and it's not directly related to your farm production and inputs and that kind of stuff. It does have a big impact on what will happen, in coming months here.
Well, thank you for your time. If anyone wants to reach out to Bob and have any further discussion about some of this commentary, what's your toll-free number, Bob?
Yeah, best number 8.
All right. Well, thank you. And if anyone would like to talk to Al or myself, I'm at 888-345-2855. And just want to say thank you and have a great day.
Thank you to our hosts today, Nick Repke and Bob Linneman, for sharing your expertise on the commodity market. For more information like this, visit agriculture.com, and don't forget to subscribe, rate, and leave us a review. You can also follow Successful Farming on Facebook, Instagram, and Threads, and be sure to check out our other podcasts, 15 Minutes with a Farmer and Successful Farming Daily, wherever you get your podcasts.